Last month, I logged into my credit card account to pay a bill, and immediately a pop-up blocked the screen. Update your annual income to help us serve you better. It presented a convenient, pre-filled form with a box inviting me to enter my current salary. I closed the window immediately. I know exactly why they are asking, and it has absolutely nothing to do with serving me better. Here is what most people fail to realize. When you share your income with a bank, you are handing them ammunition. You are feeding an algorithm that makes financial decisions based on what benefits the institution, not you. Banks have successfully normalized this process, making us feel like providing salary information is just a standard, mandatory procedure. But we rarely stop to ask, why do they want this number, and what exactly happens once they have it? First, let's clear up a common misconception. In most situations, banks are not legally required to ask for your income. There is no regulation mandating that credit card issuers must have your current salary on file. They request it because knowing your income makes them more money. This distinction is crucial. When something is legally required, you must provide it. When it is merely requested, you have a choice. The moment you submit that figure, their algorithm categorizes you. This data point becomes a key factor in determining not just your approval status, but your credit limit, your interest rates, and the marketing offers you receive. Credit limits are the most obvious example. While a higher limit might seem like a reward, banks often use it to encourage more spending. They know that customers with higher limits tend to carry higher balances, which translates into more interest payments for them. It is not a reward for your success, it is simply giving you more rope. When it comes to interest rates, income data is weaponized through what is known as ability to pay pricing. You might assume that higher income leads to lower rates, but the algorithm often views affluent customers as less likely to shop around or negotiate. Your high income can actually signal to the bank that they can charge you more without losing your business. Then there's the issue of persistent marketing. Once you reveal your income, you're sorted into specific buckets for targeted upselling. High earners are aggressively pitched premium cards with steep annual fees and personal loans. Meanwhile, those in lower income brackets might face more predatory offers, such as balance transfer promotions with hidden costs. Furthermore, this data never expires. It remains in your file indefinitely, influencing future decisions about your account status long after you've forgotten providing it. So, when is disclosure actually necessary? For mortgages and auto loans, you are often required to provide verification. Tax returns and pay stubs are standard. But for credit card applications, they rarely verify the income you report. They rely entirely on your honesty. Consequently, those periodic in-app update your income requests are entirely optional. You are under no obligation to update them. This brings us to the core of the issue, the asymmetry of the relationship. Banks hold vast amounts of information on you, your spending habits, your payment history, and your debt levels. They use this data to optimize their profits. By refusing to volunteer additional information, you balance the scales slightly. You do not need to lie, that is fraud, but you can strategically withhold information that is not legally required. I once had a friend who experienced this firsthand. She was a contractor with variable income. When she updated her salary during a high-earning month, she was immediately targeted by a barrage of sales calls and premium card offers. Her peaceful banking experience turned into a relentless sales campaign. She stopped updating her income, and within 6 months, the targeted marketing ceased. The bank's algorithms are optimized for fresh data. Stale data is less predictive and therefore less valuable to them. By keeping your information minimal, you remain harder to optimize against. Going forward, follow this strategy. For new applications, report your income honestly but conservatively. Do not include every variable component. For existing accounts, simply close the pop-up windows. You are not penalized for ignoring these requests. If you are applying for a loan where verification is mandatory, provide what is required and nothing more. Banks are profit-maximizing entities, not partners in your financial journey. Understanding this dynamic doesn't require cynicism, it just requires clear-eyed awareness. The next time that update prompt appears, remember, the bank wants ammunition for an algorithm designed to extract more profit from you. Keep your information to yourself and let your payment history and responsible behavior speak for themselves. That is the data that actually matters, and it is the only data they cannot get just by asking nicely.